Credit scores play an enormous role in our lives as consumers. This modern financial system shapes the opportunities and limitations that we the people face in our financial lives. That numerical assessment, which typically in the United States ranges from 300 to 850, reflect individuals' credit worthiness based on their credit history and financial behavior. While it may seem like just a number, credit scores wield significant influence over consumer access to credit, loans, housing, insurance, and even job opportunities. Understanding why credit scores are so crucial to consumers involves delving into the various aspects of financial life they impact. But before we go deeper on today's topic, thank you for tuning in here with us at Lakefront Credit. Also, don't forget to download our free credit repair planner. The planner is 24 pages long and will help you organize all of the documents that you may need to submit during your credit restoration journey. It includes specific strategies to use when contacting the credit bureaus and collection agencies, a credit score tracker, a weekly and monthly planner, and much, much more. Now, let's talk about the many different aspects in our lives that our credit score touches. Number 1, access to credit and loans. Credit scores directly affect individuals' ability to access credit and loans from financial institutions. Lenders use credit scores as a primary factor in determining the risk associated with lending money. A higher credit score signifies a lower risk borrower, making it easier to qualify for loans with favorable terms, such as lower interest rates and higher borrowing limits. Conversely, individuals with lower credit scores may face challenges in obtaining credit or may only qualify for loans with less favorable terms. Number 2, interest rates. The interest rate on a loan is directly tied to the borrower's credit score. A higher credit score often translates to lower interest rates, saving borrowers significant amounts of money over the life of a loan. For example, when purchasing a home, even a slight difference in interest rates can result in substantial savings or additional costs over the term of a mortgage. Thus, maintaining a good credit score can lead to considerable financial savings through lower interest payments. Number 3, housing opportunities. Credit scores also play a crucial role in housing opportunities. Landlords and property management companies frequently check applicants' credit scores as part of the rental application process. A higher credit score can increase the likelihood of securing a desirable rental property. Additionally, when purchasing a home, mortgage lenders use credit scores to assess the risk of lending and determine the terms of the mortgage. A strong credit score can make it easier to qualify for a mortgage and may result in lower down payment requirements and better mortgage rates. Number 4, insurance premiums. Insurance companies often consider credit scores when determining insurance premiums. Studies have shown a correlation between credit scores and insurance risk, with individuals with lower credit scores tending to file more insurance claims. As a result, those with higher credit scores may benefit from lower insurance premiums, while individuals with lower scores may face higher premiums or have difficulty obtaining certain types of insurance coverage. Number 5, employment opportunities. In some industries, employers may review applicants' credit report as part of the hiring process, especially for positions that involve financial responsibilities or access to sensitive information. While credit history is not indicative of job performance, employers may perceive individuals with poor credit as less responsible or trustworthy. Consequently, a low credit score could potentially hinder job prospects, particularly in competitive job markets. Number 6, utility services. Utility companies such as electricity, water, and cable providers may check credit scores when determining whether to approve service for new customers. A poor credit history could result in the need for a security deposit, or may even lead to denial of service altogether. Maintaining a good credit score can streamline the process of setting up essential utility services and may eliminate the need for additional upfront costs. Number 7, financial flexibility. A high credit score affords consumers greater financial flexibility and opportunities. With a strong credit profile, individuals can qualify for credit cards with higher spending limits, provide them with additional purchasing power. Moreover, in emergencies or unexpected financial challenges, having access to credit can serve as a safety net, allowing individuals to address urgent expenses without resorting to high-interest loans or draining savings accounts. Number 8, building wealth. Ultimately, a good credit score is instrumental in building wealth and achieving long-term financial goals. Whether it's purchasing a home, starting a business, or investing in higher education, access to credit at favorable terms can facilitate these endeavors and accelerate wealth accumulation. Conversely, individuals with poor credit may find themselves trapped in cycles of high interest debt, hindering their ability to build assets and secure their financial future. In conclusion, credit scores are indispensable tools that profoundly impact consumers' financial lives. From accessing credit and loans to securing housing, insurance, and employment opportunities, credit scores influence nearly every aspect of modern financial transactions. Maintaining a good credit score is essential for individuals seeking to unlock financial opportunities, minimize borrowing costs, and build a solid foundation for long-term financial success. By understanding the importance of credit scores and adopting responsible financial habits, consumers can take control of their credit profile and pave the way toward achieving their financial goals. If you found this information helpful, please like, share, and subscribe, and we'll see you on the next one.